Good morning, everybody. Welcome to the Flow Show. It's Monday. We're starting a new week. Welcome back to Kay, and good morning, Stel.
Hey, good morning, everybody. Good to be back.
Good morning.
Yeah, good morning.
It's been
Have a good break.
It's been quiet last week, right? When I was
Yeah, you could say that.
Nothing happening. I was just saying putting on the chat. I mean, euro is about 50 points higher, having done 150 points yo-yo. Sterling is about 200 points higher though than where I left it, having done 400 pips or so yo-yo.
Yeah.
The only one really moving very far from where I left it is dollar yen. It's about 350 pips higher. So
Yeah, that's what happens when you turn your back for 5 minutes.
yeah, non-stop story there.
Yeah. You, Stel, you had a good weekend?
Oh, good. Yeah, not bad at all. All good.
Good.
Nice and quiet.
Yeah, that's the way we like it sometimes, especially after these weekends.
Yeah.
Right, well, let's get stuck right into it because we have got UK Chancellor issuing a statement at 11 o'clock. I don't know why these guys think that they can go and announce big policy moves right in the middle of the Flow Show. They need to have a bit more respect, in my opinion, but that's what we've got. So about 11 o'clock, about half hour's time, we'll be keeping half an eye on the screens there just to see if there's any market moving news coming from that. But I'll detail what's going on there in a moment. Right, so over to China. First things first, they're going to be delaying their economic data. I think it's to do with Congress week. I haven't actually seen a reason why they're doing it, but a headline popped up from the Stats Bureau that they're going to be delaying their economic data. Tonight, tomorrow morning in China, we were due to get retail sales, GDP, fixed asset investments, and industrial production numbers. So that's all been knocked on the head. Let's just get that up there. Tomorrow. So all that data there basically has been delayed. Not sure why. It could be because obviously they're in the middle of the People's Party Congress. So that could be a reason why, but we'll look into that anyway. But that's been stopped. Headlines out, and again, this is part of something that we spoke about prior to this meeting about propping up markets. Apparently, Chinese hedge funds are going to be buying their own products to prop up prices and that area of investment. Again, that's coming out from state sources. They're also saying that China will be stopping gas sales to foreign buyers to protect domestic demand. We have heard previously that shutdowns in manufacturing sectors, parts of the country where there's big manufacturing processes, shutdowns there to protect electricity for domestic use, for civilian use. Now apparently they're going to be stopping gas sales to foreigners as well, again to protect domestic demand. That might have an impact on what's going on in the bigger picture with energy supplies, obviously with Europe looking at other sources of getting gas. So that may be an impact there, depending on the numbers involved. As far as the Congress goes, nothing really huge came out of it, jaw-dropping, let's call it that way. They're going to stick with a zero COVID policy, Xi saying that. And on Taiwan, he spoke that a reunification should happen at some point in a peaceful manner, but they are still prepared to be strong on the matter if the need arises, and that foreign influences are not welcome there. But otherwise, nothing really huge out of that so far. Obviously, it is going on for a few more days. Japan next. Kuroda said that they're going to keep easing, but also they're going to perhaps increase their forecast for CPI for the fiscal year 2022-2023, currently at 2.3%. Kyodo News was out saying that they might raise that forecast to the high end of the 2% mark, so looking at the upper end of the 2% mark. But otherwise, Kuroda saying he's going to continue easing. Now, on Captain Charisma himself, PM Kishida said that they're going to start considering his successor. So just an early warning there. His term is up. I can't remember when, March or April next year, I think it is, isn't it, Kay?
Yeah, it's the end of the fiscal year marks the end of his BOJ governor period as well. So
Yeah, when is that? Just missed the
it's
beginning.
the end of the fiscal. It's end of March. He's done. So yeah.
Yeah.
But there's been already a couple of rumors flying around. One of them, I don't recall the name exactly, but it would be roughly a same liner. There were some expectations that Kishida would want to put in a less dovish governor, but the name that's been circulating would mean not too much deviation of actual monetary policy plans anyway.
Was that is it Amamara? Was he one of the names? Amamiya, yeah.
It's possible, yeah, and he's just the same liner as Kuroda would be.
Yeah. But speaking of Kishida, he's also under a bit of political pressure as well. Their approval rating has fallen significantly, or the cabinet's approval rating has fallen significantly. And apparently there's some scandal going on with a particular church religion, the Moonies. I don't remember those guys. That's potentially implicating a lot of the Japanese government MPs and stuff, and he's been forced into an investigation just to see how deep those roots go down. So it's something to bear in mind, that there is a bit of political turmoil going on with Kishida. As we've spoken about before, the political situation in Japan is that there's not really an opposition party with enough support to put in a serious challenge. But still, from an outside looking in perspective, the market doesn't like political uncertainty, and you can see the result of that with what's going on in the UK. But just a story to keep an eye on there for those in the chat room. I put it up in our newsroom. But back to the Bank of Japan, and this is all coming amongst a slew of other headlines, the usual FX headlines. So we'll start with Deputy Governor Wakatabe saying recent fluctuations in the currency are too rapid and too one-sided. So again, we're looking for the signals that are leading us up to another round of intervention. So saying that these recent moves are too rapid and too one-sided puts us in the element that what we're seeing is also too one-sided and too rapid. Now, Suzuki was out saying they're ready to take bold action against speculative moves. Now, the speculative word has come out a bit. No one said we are seeing speculative moves. It's all we will react against speculative moves. If we get that step up into we are seeing speculative moves, that's when we're now real intervention watch. We could be, just slicing and dicing the words here, because the moves since the CPI have continued to see dollar yen high. That's even as we've seen bond yields falling back a bit, particularly in the US. So it does look like dollar yen is sort of out on a limb once again. So I think we are potentially close to intervention once again, but it's all down to the language. But we've had the FX diplomat, as he's called, or currency diplomat, Kanda, saying they'll respond to excessive moves. So it's all, we've got the rhetoric there, just looking for those subtle language changes that make it a step up or a step down from where we are now. Right, moving on to Europe. France is under the cosh of national strikes as well. EDF are seeing some strikes at their nuclear plants, which is hitting about a third of plants over there, and it's going to delay planned maintenance. This comes on top of a big troublesome refinery strike, leading to petrol shortages at fueling stations. So much like the UK dealing with strikes in transport and other utilities, France is under the cosh here as well. That's going to likely impact things like inflation over there as well. Now over to the ECB, we've had a sources piece out from Econostream, and they're pretty spot on with their stuff usually. And it's saying that ECB's Lane is going to propose a 75 pip hike at the October meeting. Now, this is round about what we've heard from ECB members, particularly last week. A lot of the hawks saying 75 this meeting, 50 in December. But you need to understand really the role of ECB's Lane. He's the ECB's chief economist. What happens at ECB meetings is that he produces a report of what the ECB should do. So he tables the motion, if you like, of what the ECB should do at that meeting, raise, buy, whatever, do whatever. That's what gets discussed at the Governing Council meeting. And from that plan that he puts forward, a consensus is made or not made, depending how it falls. Little changes, subtle changes are made around that. It's either disagreed with or not agreed with, or agreed with, and then that becomes policy for that particular meeting. So ECB's Lane input into this is very important because he puts forward the plan that then gets voted on in effect. That's how ECB meetings work. It's not everyone just putting in their opinion and then they take a consensus. They have a plan, they all talk about it, vote on it, whatever. So it's probably not too much of a shock to know that 75 pips is the expected outcome from the meeting, but this is just cementing that a bit more. Over to the Fed, Willie Bullard was out saying pretty much a no shit Sherlock comment, saying that the boost to the dollar from hikes may ease once the Fed hits their rate top. That might be seen as pretty much the case already if you look at some of the other pairs, Aussie dollar, euro, pound versus the dollar. Not really moving to any new highs, pretty much looking stable at the moment. We have had a few wobbles, taking the Aussie dollar in one sense, but there are signs that we're not ready to move just yet to new highs for the dollar, lows for some of those other currencies. Obviously, the outlier is dollar yen at the moment, continuing to sit on its highs and move higher. So it's going to be about where the market sees expectations. As I mentioned last week and before the CPI report, it's will the Fed have to do more than what they are now? It's a bit of a 50-50 in my opinion, based on inflation. We've got the inflation numbers last week. Third drop of the month, third drop on the trot on the headline inflation, 2 raises on the month or rises on the month in the core number. So it's a bit, it's not clear in my opinion what the Fed needs to do based on those numbers. We need to watch the trend. One other thing, there's been some terrible floods in Australia's Victoria region. Damage may be considerable. Something to bear in mind. Obviously, we hope the situation improves for people over there on the humane side, obviously. But the RBA is the 1st of November. If it comes around that this damage is extensive, it's going to cost a lot of money. That may be something that gets noted by the RBA, potentially the view of maybe easing off on hikes or taking that into consideration when they make their decision on hikes. So it's an ongoing situation at the moment, one to keep an eye on there. Before we get stuck into all the UK stuff, you two chaps have anything you want to add for comments on what's been out overnight in the weekend?
Well, there hasn't been much overnight. That's the problem. I don't have anything to add. No, sorry.
No worries, mate. No worries. Okay. You're playing a bit of catch up.
Yeah, I'm playing catch up, but one thing that caught my eye is that the G20 couldn't agree on anything, and especially not on what's happening with the US and the dollar and dollar rates compared to the rest of the world, where the US wasn't really ready. To put it simply, to put a second Plaza Accord in place. So that struck me a little bit. A lot of disagreement on a lot of points. The only thing they could agree on was the Russian situation and Ukraine. But for the rest, there was a bit of screaming and shouting, or crying, I should say, from the weaker countries that the dollar rates and the dollar strength is putting stress on on their situation, but US rather said, well, it's not really my problem. We are doing whatever we judge is necessary to do. And then and the other thing I saw as well was people now starting to talk, because we've got the US what is it, half-term elections coming up, and wondering if the Fed would do something or slow something to give Biden a victory. But Biden hasn't really asked anything to the Fed so far to stop raising or do anything. On the contrary, he was the one saying that they should really fight inflation. So that was a bit of the weekend comments that I saw, but you've summed up all the rest, really.
Yeah, cheers, mate. Obviously we had the G7 statement from the finance ministers on FX last week as well, which pretty much said they're going to maintain their stance that they have done for several years, monitoring against excessive volatility and that sort of stuff. So yeah, and with the wider G20 or lack of G20 statement, that's pretty much in place. Right, let's get into this UK stuff, just to bring some of you folks up to speed who may not know. The new Chancellor Hunt is in place. He's coming out with a fiscal statement in around 14 minutes. It's a bit of an update. No one's really sure what it's going to entail, but there's best guesses. There's already been a couple of reverses in some of the tax policies that were going to happen. This statement can really go one of two ways. It's either going to be him smoothing over what's already to come, saying that they're looking at it, maybe giving an idea that the fiscal numbers, the costs of all this is not going to be as bad as everyone expects. It could be a load of political waffle trying to say spin it out and smooth it over. If that's the case, the market's likely to take a grim view of that. All the market is waiting for now is for more U-turns to undo what's been done, what's been put forward, and that'll be positive for the pound and everything else going forward. I struggle to see that actually happening, but we have to wait and see. If he does reverse a lot in this statement of what was put forward by the prior Chancellor, that's going to undermine Liz Truss's position even more, because she backed those policies and they were part of her campaign to become leader. So it's a bit of a toss-up how far Hunt may go on this. He is being tipped potentially to remain as Chancellor if Liz Truss is outed, and maybe someone like Sunak comes in for a bit of continuity, but all that's up in the air. On the flip side, if he does announce things in this statement that are seen very positive by the market, i.e. a complete reversal of all these policies, or indeed that the cost effects are not going to be as big as expected and the market buys that explanation, of course that comes ahead of the October 31st full statement and the Office of Budget Responsibility giving their chapter and verse on it. If it is really positive, you're going to see the pound rally, you're going to see gilt yields probably falling back. How far that goes is anyone's guess. This is cable. It can move 200 pips, it can move 500 pips. This is really not one I'm going to be looking at on the charts and putting too much faith in the nearby tech at least. We know we've got to level up at 115, but if the news is hugely positive, I don't expect that to last. We could be back up to 118, who knows? So if you've got levels, I'd look at the wide ones, but I wouldn't trust them too much, because this could be wild. And what we've got to remember is that whatever he says about this fiscal stuff going on, it doesn't change the underlying fundamentals that are still in play at the moment in the UK. That's high inflation, potential of going into recession, and a central bank hiking. So you've really still got to look at all this fiscal stuff as a short-term bit of noise in the bigger picture. Because even though we may rally however much on good news, we're going to run into a wall of those three reasons: high inflation, possible recession, same as every other country, and a central bank hiking. And that is going to outweigh all this fiscal stuff further down the road. So don't think that good news from this Hunt stuff means we found a bottoming cable for the next 20 years. that potentially may not be the situation. But moving on to the BOE, Hunt has had a meeting with both the BOE and OBR just to have a chat about what he's potentially going to be putting in his statement. We've not had any comments from them, but they've been briefed in it. So maybe we should side with something a bit more positive, but we don't know. And on the Bailey front, he spoke over the weekend, and he said that rates are likely to rise more than expected. And to quote him, he says, as things stand, his best guess is that the inflationary pressures will require a stronger response than we thought in August. So he's tipping the hat or tipping the nod to higher rates than expected. At the moment, the probability pricing for the BOE has a 100 basis point hike at 72.5% and a 75 pip hike at 27.5%. So that's where we lie on the expectation front. Early November is the next Bank of England meeting coming up. Right, anything else you boys and girls want to look at that or add to that? Oh, sorry, I just need to throw in something else. There are apparently rumours that some MPs are looking to change the rules so they can oust Trust within a year. There is a rule in place saying a new PM can't be shifted within a year. What are rules if you can't change them? That's what's being rumoured there. So we still may get Trust outed. Either way, it's a big mess. If that doesn't happen, Labour could call a vote of no confidence. We could be heading towards a general election. The soap opera goes on. Yeah, so any other things you want to add to that, boys, and Kay and Stell, before we get into looking at the prices?
Well, the pound is it's a tough one. I think you're right that the fundamentals remain. So the central bank is still hiking. They did mention recently that perhaps, I can't remember who it was within the Bank of England, perhaps the rate of hikes will need to be reduced or something like that. So, at the end of the day, inflation is 10%. When inflation is at 10%, then it's not on a downward trend, you have to keep going. And that's what the Fed's been doing. And that's what they should be doing. And if you think about it, the Bank of England is way behind, 10% in the UK, 8.5, 8 point something in the US. And the Fed's doing 75s and the Bank of England is doing 50s and, started a lot later. So, the fundamentals are still there. And also we have to remind ourselves, it's really, what the UK is going through right now. It's kind of the same. I don't want to generalize, but it's not something that's individual to the UK. All these the issues with the pensions and potential liquidity events. This is all brewing everywhere. So it's the UK is first out of the blocks, so it's taking some pain. So eventually, I think there's going to be a time when we're going to be really, really bullish the pound. But I don't think we're there just yet. I don't think so. And one other thing I want to say, you missed it, Cayman. I was very, very happy with myself with a tweet I posted about, Kwasi Kwarteng. He was a chancellor for such a short period of time that you could say, he wasn't a proper chancellor. He was a quasi-chancellor. Come on, that's funny, isn't it? Is it not? Right. Come on, it is funny.
I think we can stop the flow show right there. That was spectacular. Spectacular is the word.
Don't give up your day job, mate.
Yeah.
Hope you're not buying the Christmas packers this year.
Okay, I'm going to shut up now.
We've just seen a reporter of the Times saying that Jeremy Hunt is poised to announce that the energy price guarantee will only remain universal until April. That seems one of the points that he may be bringing forward in a few minutes' time, five or so minutes from now.
Yeah. Also, there's another headline that the BOE plans to resume QT of corporate bonds next week. They did put that on hold while they were doing this bond buying program. So far today, yields are holding up pretty well, or doing pretty well. There's no real upside volatility going on as we speak. So as far as all that stuff that went on last week, this is going to be something to watch. If there's any big spikes, it's going to indicate there might be further problems in the pension sector, and that they might have to step in. But as now, as the picture looks, everything looks a-okay, and they're going to resume QT of corporate bonds next week. Just a quick look at what's coming up this week on the data front. Today we get the US Empire State Manufacturing, so that's the first manufacturing data of the new month. Then that's going to be followed by the Philly Fed on Thursday, which is the second piece of manufacturing data of the new month. So that tends to give us a little bit of an indication on what's going to come from things like the ISM and PMI. So keep an eye on those. They have been pretty wild of late. Also later today, we've got the BOC Business Outlook Survey. That can be a bit of a CAD mover, depending on what comes out in it, how bullish or bearish firms look in Canada. As mentioned, that Chinese data you can see Tuesday, that's not coming. And we get a whole host of new housing data from the US this week as well. Housing market index, housing starts and permits on Wednesday. Existing home sales. Again, I'll be looking for the prices component of those to see how the market is doing. We know the market has been a bit soft of late, but prices are the last domino to fall, as I keep calling it. So housing starts and permits will give us a look at the overall activity, and then in the existing home sales, new home sales that will follow, we'll get price aspects there. Industrial production tomorrow in the US as well. On Wednesday, we get Eurozone final HRCP numbers and UK CPI numbers. So more inflation for the pipeline there, PPI from the UK too. Other than that, UK retail sales on Friday, not too much on the US data front outside of those manufacturing and housing numbers. Look for Aussie jobs as well on Thursday. That could be something that plays into the RBA's next meeting, and on Friday, Japanese CPI to see how transitory this CPI is in Japan. So that's a quick look there. Kate, do you want to do your little round robin, and I'll keep an eye on the screen for any headlines from Hunt and whatnot.
Okay, I'm still a bit catching up on whatever happened, but I can show a few pictures.
Yeah, stick to the majors or something, whatever you want to do, mate.
Yeah.
Be free to keep an eye on the headline front. So excuse me if I talk in the middle.
All right. Okay, I'll grab it. Okay. Here we go. So yeah. First of all, I suppose you see my euro-dollar chart.
Yep, got it, mate.
All right. So first of all, we had this test again of the 96.5 last week. Then we had a pretty solid rebound on just post CPIs. I don't know exactly why did this happen, but anyway, we are holding here around 98. There's a bit of a shorter term. Well, I mean, shorter term still coming from July trend line, which is respected now a couple of times, held here, held there. And now we're starting to cap around there. So I think the first real level of interest in the euro dollar is going to be around 98 and a quarter on the top side. If we start to get above there, there's a chance to get back into this wedge or triangle, whatever you call it, and then have a look back at what's happening in the 99s. This trend line is now coming down, and then the other one, the bigger one, the longer term one, is more around parity right here and now. So those are going to be the levels to watch top side. I don't really have too much of a short-term view, but the fact that we are capping around these levels and not being that far from last week levels, it does tell me that euro still hasn't got too much, or the euro players haven't got too much conviction that ECB is really going to catch up on the Fed. But I think we have to let the data talk now. But for the start of the week, I would watch this 98 and a quarter. If it starts to test there, downside seems to be holding around 97.10 right now. But I'd say watch the mid 96s rather for guidance if euro would start to falter again. And then we had a quick look at the cable this morning. It's wild, it's a yo-yo, but there's a very interesting, and Gregor was talking about this level as well. And I have this trend line also coming in from a while back. Yeah, this is the one from 2017. There is one here, and that comes in right around 109 and a quarter, 109.30, and that's where we held last week. So I think that is going forward to see what happens after what Hunt is telling us. If ever sterling is going to get back down there, the cable at least, this is going to be an important level in my opinion. The low 109s. Keep in mind for the medium term on the cable. On the top side, a couple of levels that we can have a look at now is 114 for a starter. And okay, there's 114 and a quarter as well, but we have to look at a bit wider levels. I think it's around 114, and then the prior top just shy of 115, and there's a 61.8 there as well at 115.5. So this 115.5 to me is going to be quite important for perhaps a bit more medium term or at least relief moves if they are warranted. If it breaks 115.5, why not then have a retest of 118s? But so I would say the bigger lines are going to be 109, low 109s, and 115.5, and then you have a few intermediate stops around 114, 113 and a quarter, I would say. And on the downside, keep an eye on 111, and then this 110 and a quarter, I'd say, with the bigger level around 109, 109 and a quarter, 25, 35, call it. On the dollar yen, well, it's hard to chase it, and it's equally hard to fight it because it's not really coming off a lot. So what I did this morning was just having a look at this, what is it, triangle or so. The width of it is about that was the intervention as well. The real width of it is about 500 pips at the month here. And we may be looking at a target at around 115.35, half 150 mids, sorry, which would also coincide roughly with what we have seen of late. The more medium-term trend is also hanging around this 150 somewhere, but it's really hard to actually trade it when just back from a few days off and finding dollar yen 300 or 400 points higher without really much of a retracement. We can only see here that that's the day of the CPI. There's some rumors around that they might have intervened that day, sending dollar yen 100 pips lower, but it's all unconfirmed. We'll have to wait for the I think end of the month also for the confirmation to see if they really intervened there. But fact is, we are around the highs, and I don't see much on the rates front to say we have to start really counter trade this dollar yen. It will top out one day, but I'm not sure when. One interesting one, though, speaking about those yields, because that's where dollar yen is plugged onto, is that we went over 4% again on the 10s on the day of the CPI, but then failed again. So that's the first here, second here, failure above 4%. So on the US 10s, it's really quite a level to respect, and it's also an extension. What we can see here, an extension around 410. So this 410 zone is really one to keep a close eye on in the US 10s. I haven't really charted much on the 2 years, but the 2 years, they are now, just looking at the level where they are now hanging around what could be seen as a possible target or end rate of the Fed around that 4.5%. We've heard Evans, we've heard Williams talk about 4.5, 4.75, and that's where we hang around now. So I think from here, let the data speak, and let the data tell us if we are going to continue to push higher, perhaps towards that 4 3/4 that they were mentioning as the top end of a possible target rate. Quick look at what's happening in gold and silver, because they had like pretty strong rejections of the moves higher. We are now back below this 1680 zone, 1680.84 that we've always been speaking about. We're back below this zone. We're hanging around, a bit of a trend line, but I don't really like it. I think this one is a bit of a better one, coming from further away around 1640. This is where we have to keep an eye on, and then the prior lows. To really tell us that a bottom is in place, we should really get back above 77.84 zone, confirmation back through 1690 to get going topside again. For now, looking at where the rates are, I don't really have a lot of conviction. I'm staying out of this one for now. I really don't know what to do with gold here and now. Silver, just before leaving, we were talking about this 1940-50 zone all the time. I tried to catch a small knife, but before the engine got even started to drive off, I got stopped already back below 1940. Bit of a support here coming in 18.25. We're trading 1860s right now, but we really need to get back above 1895, 19 bucks to even possibly retest 1930, 19 and a half. For now, think a bit of range play. Keep an eye on these 18.25. To see what's happening there if we ever go for the retest. Quick look at some emergings. Dollar makes not a lot to say. It's like we had this spike higher at the end of September, but then we back around 20. For it to go lower, we really have to break below 19, call it 70, 80. That would cause a deeper drop, in my opinion, back to the trend line, another percent, and then perhaps another percent waiting here down to 1940 for the time being, not touching it. The perhaps more interesting one is that each rebound of Euromex is holding the prior bounces and patterns, and we can't. I was telling about this 20 in the Euromex. We couldn't hold it. We still can't hold it, and now we are small wedge here, broken back below this 1960, which I highlighted a couple of times, and rebounds are also now shy of this level. We need to get back above 60, 65 to get going again. Still running my usual ones. The carry is still behaving very well. Even if ECB would raise rates, the Banxico is well ahead of everybody, and since they are a bit in a copy-paste mode of what's going on at the FOMC, their next we will be looking at a Mexican rate of 10%. So here we can find this 1960 again on the longer term. I think there's a fair chance that we are going to see low 19s just by the weight of it, really. I'd start to get a bit nervous if we get back above 20 and hold it. Let's put it that way. Really, for me, quick one.
Sorry, mate. The comments are just dropping now.
Okay, go ahead.
The measures announced today will be to raise £32 billion. Will reverse cuts to dividend tax rates and tourist VAT. Let's have a look. Scrap plan to cut income tax indefinitely. They were going to due to cut that by a penny. They're scrapping that indefinitely. More difficult decisions are coming on spending. So going very tight there on the policy. Cable is shooting up 113s. Let's have a look at gilt yields. Kay, you can keep the screen for a mo. So it's looking like a lot of a reversal going on here, quite a big reversal going on here. Tightening up on the decisions how much they're going to spend. So looks like maybe more taxes and spending.
So Truss got elected, and now we are looking at Sunak's program.
Yeah, basically.
So yeah, all right.
Incredible.
I mean that's pretty logic. Yeah, so we are here around this 113, 2030 zone, and the euro going up a little bit. Actually, Aussie and Kiwi rising as well in sympathy. Yeah, so let's see how we do here around 113.
This is pretty much what the market's expecting. He's saying it's not right to borrow to fund tax cuts. So yeah, it looks like a complete 180 on everything, pretty much everything. But
yeah, so it's back to square before Truss and Quarting.
But yeah, square -1.
Square -1. Okay. Yeah, it's I don't know whether there's going to be a second wind, but for now it's running out of steam a little bit around this 113.30. Still hanging around 113.15 right now. Yeah, do you want us to look at anything else, guys? Just let us know. I'm a bit the one thing which is funny though is this $yuan, right? We had this this move back down close to 7. That was actually during the Chinese Golden Week. We did a low on the $yuan, and now we are already back 3% higher and very close to prior levels. I've seen an People's Bank of China official saying that they expect to dollar China to range between 7 and 7.30. It might not be too far off, but it does seem that the market is still firmly on the bandwagon of PBOC easing, governments putting stimulus in place. I'd say, really, in my opinion, this is still a buy on dips. They're trying to keep the fixings around 7.10 right now. So anywhere closer to the fixing, I'd get interested in seeing what's happened there with the dollar China. And I think the stop is relatively easily put now. If you are a very tight trader, just if it breaks below 7, around 6.99 or so. And if you're looking at the wider picture, it's really 6.90.93, which should be holding on this one. If we get back below here, I think there may be a reversal coming. But if not, the wider picture still shows for very much bid scenario. And with that, I'm giving it back to you until unless anyone really wants to look at something.
Anyone got anything in there?
Anyway, I'll give the charts back to you. Okay.
Yeah, no problem, mate. Right, I'm looking, seeing what gets stuck into this hunt stuff is. So unless anyone's got anything in particular, we might call that a day now, because I want to see what markets are going to do with this.
So good to have you back, Cayman. It was really boring without you. just me and Ryan.
I enjoyed your company. Thanks, Dale.
Oh my God! By the way, we have to note really strongly 115 in cable. I know it's not close yet. 115 is a massive level. If that gets taken out, we get full-on bullish.
Yeah, it's big. It's big. Yeah.
Not getting in the moment.
It used to be somewhere in the 117.5 down to 116.70 or so, but I think the 115 now has taken over. I agree.
Yeah.
Yeah, and especially given the reaction now, we've had all this news. It's not sprinting up there really fast. I think there's still some details to be hammered out here, and we'll see what this continues. But again, I'll reiterate the point. Whatever happens with this episode, we're still going to see the UK running in to the wider problems of inflation, interest rate rises, potential recessions. So always keep that in the back of your mind. But keep an eye on UK gilts, 10 years there, looking maybe to fully close that move since just before when the details were announced of this. Yields were around 3.7%, I think. when we got into this fiscal stuff. So see how it goes from here. But yeah, I'm going to get stuck into this, see if there's anything worth trading here. So we'll call that a day for today. Thank you very much for coming to the Flow Show. Please also don't forget to sign up for the Traders Summit this weekend. It all happens this weekend, so be quick. Places are running out, I've been told by the powers that be. I'll put a link into the chat room there.
I just put it on the chat box. Oh, there you go.
Okay.
You put yeah.
There you go. Put it twice. Better twice than none. So
Super.
yeah, sign up there. Get in quick because places are now becoming limited. We've got a big, massive show coming up this weekend.
Yeah, and that debate, Peter Schiff, Danny Blanchflower. I mean, that's ex-MPC member versus Peter Schiff, who we know is very vocal. I think they agree on a few things, but they disagree on many others. So it's going to be very, very interesting. Yeah.
Good battle. Okay, folks, thank you very much for coming to the Flow Show. Wish you a good week ahead, good day ahead. We shall see you bright and breezy tomorrow.